Good turnaround Tuesday, everybody. Hi, Kevin, Brock. Everyone doing okay? So, turnaround Tuesday, what's the choice? Dixie made a new low, looking pretty ugly on multiple time frames. Look at the RSI. So, there could be a turn here. It's not my preferred trade down here, but I wouldn't short it down here just in case it's just a stop hunt under these lows. Euro, I think, missed the high by, what's the high today so far? It is 12 and a half. So we've missed new highs in Euro. We haven't made new highs in Aussie. We're pretty close for about six away. So also yen, I don't know what to do with it. I'm a little surprised with this action after what happened with interest rates last week, and I there's that correlation thing really not working because look how much yen has given up compared to the 10-year. Look at that chart and look at this chart. It's like night and day, especially on the long end with the yield steepening. So my preferred short on a turnaround Tuesday is the S&P's up here. And yeah, US dollar CAD broke down. Everything plays with your emotions, TN, in this business. That's really the deal, is controlling them. And I know it's not easy because I'm an emotional guy, not really suited for my 40-year career. So anyway, look at the S&Ps here. And you could always find divergences on one or two time frames. It's a triangle with one more shot to the upside, maybe. To me, I think that we're in this time zone. The Bradley date is tomorrow. But when you look at the RSI on multiple time frames, you could always find a divergence on one time frame or another. But here's the daily. We're not confirming. We haven't confirmed since June 20th, so that's a month and a half. Here's the 4 hour. Pretty glaring, isn't it, compared to where we were here? We have a 60 reading. Okay, Gann super cycle. Okay, so there's a few things here. You know, one thing about these dates, Pippin, is that you have to give it one day either side of it. It's usually, sometimes you could get a hit on the day, but I've seen a lot of these turning points happen. They're all. This is what Jess. This is what my favorite is when all of them are lining up. Okay, so there's your glaring divergence in 4. There's your 2 hour. That's diverging. Look at 1. So my favorite divergency. There's a 1. I could keep going. There's the 30. That didn't even make a new high. Let's see if the 15 did. Okay, the 15 did barely. So maybe we get another shot up there, but I took a shot at 33.90.20, and I'm risking 30 handles, 1%, just in case it turns out to be a top for, you know, 7 to 10% correction. But that was a good question because my favorite TF for divergence is when you have multiple time frames giving you the same message. When you have conflicting, you could get divergences on long-term time frames, and your shorter-term time frames are not lining up with it, and you could go broke waiting for all of those. All 7 Gann cycles top. Okay. All right. So, I'm willing to be a day early. That's why I gave it some tolerance, Pippin. you know. So anyway, we'll see what happens. how much higher it's going into tomorrow, but that's my call. Here's your metals. You know, this is Blake said we could rally back to 2000 on his bias chart. Here we are. So if you took his bias chart seriously, you did a little buying coming into this week. Now we'll see. This is a pretty important point here. If we're going to get, something like this from here, and a lot of it's going to depend on the dollar. Um, Actually, I thought we'd get one more pop in WTI, and it's still early. Thought maybe we would take out this high first before we head lower, and silver way outperforming. Almost looks like we could get a new high in silver, and it was a little different in gold than it was in silver. Not much, but a little. Silver, I can't even trade them anymore because, when I would say, let your trades breathe, you know, you almost have to risk $20 now in gold for a swing trade and a buck in silver the way it's trading. So I'm not trading them. Yeah, I can invest in it, but right now it's a very difficult trade with this volatility. Hello, Sinatra. I still think that interest rates, that this was just the first wave here, and maybe the 10-year pulls back to 62, but I don't think it's done. Um, One thing I will say about the dollar, that if you want to fade it, these are the kind of days that, and I'm not going to do it because why shouldn't the euro make a new high? It's only about 10 pips away. But when the euro is weaker than cable, they're better days to fade than if it was opposite. Well, what do you want me to be careful about? I'm trying to figure it out. Also, yesterday, you should be careful every day, Pippin, in everything you do, because everything can happen. Here's NASDAQ. So we popped above, talked about, I thought we could get above this double top in NAS. Oh, no, no, it was a turnaround Tuesday short at 90.20. So here's NASDAQ, but thank you for caring. I know that, if I lost money today, that it would really, upset you, but thank you very much. Um, anyway, see this double top that we broke through, talked about that happening. So, what you can do is wait for a close, say on a 4-hour chart, or, because you don't know if it's going to close back under that blue line until the time frame is there, that the candle closes. You could anticipate it if the candle's trading underneath it. Doesn't mean it'll close under it. So my instructions are wait for a close. You may give up a little bit of an edge because you're not selling the top, but then we could call it like a breakout failure and mainly just a stop hunt where it took all the bears out that had stops over these two levels, which I thought would happen. It's happening now. The way to trade, wait for that to be negated. Okay. We're going to have Grega here today. So should get some great looks from Grega. Anything else? Yeah, here's Canada. Okay. So you could do the same thing with Canada. Steve's on vacation, well deserved. Canada broke this long-term trend line here, but markets are notorious for doing that. So you could trade the Canadian the same way I talked about trading. Um, okay, the Nasdaq. that if we start closing back above this long-term trend line, here's the trend line. I think I need a weekly to show it. I know Blake showed this trend line. Everyone has it. So it's underneath it right now. You could see it, on the 2-hour. But if we start getting back above this level, it's a shot with stops under the low once it's back inside the channel. Yeah, it could be a false break. We're getting lots of them everywhere. As yeah, as algos and all the black box traders seek liquidity, we're seeing a lot of breakouts. So be careful if you're, I wouldn't be shorting Canada down here. And with Canada making new lows, it hasn't happened yet, but Aussie about to make new lows. I'm wrong. I'm down about 29, 30 pips on this. I was looking for an outside week, so I actually thought the 92.50 level would hold, but I can't buy Aussie up here either. It's only Tuesday. Let's see what happens here. And with that being said, I'm going to bring Blake in and get its bias chart. Pay attention to this bias chart. And what you want to do is really, for the rest of the day, is take a screenshot, and you'll see a lot of these areas come into play because Blake's an excellent technician, one of the best I know. And he spends hours doing it every day. So if you're lazy, you're not going to succeed in this business. You have to spend time doing your research and working on your stuff. A saying I'm known for lately is the secret to trading is there is none. It's hard work, perseverance, and living through adversity. And if that scares you, do something else. So I'm going to turn it over to a guy who's, gotten through all that, and we still go through that. I don't care how many years you've been doing it, you still have to go through those times. And I don't know, Mark. I'm going to call Nostradamus after the close, and I'll get back to you on that. But I will say this: that most corrections last about 7 weeks. I don't know how long this COVID one. I don't think it was 7 weeks. But if we're peaking in mid-August, 7 weeks actually takes you into early October. So we'll see. Oh, do you like the Wizard books? Okay. I like Jack Schwager. Okay. All right. So, Blake, how are you today, buddy? Is it Friday?
I was hoping. Doing
How are you,
okay.
buddy?
Good. I just wanted to. So we do have Grega coming in today, which is
Yeah.
exciting. For those of you that don't know who Grega Horvat is, he's our Elliotician in house who does all the Elliott work. And I know some of you have heard him before. I've been following Grega even before Forex Analytics. I'm talking. I've followed him for probably 8 or 9 years, somewhere in that neighborhood. Very super talented technician, and more importantly, just a really genuinely nice person. So
He's like the Brad Pitt of FX.
yeah, he is.
Lots
He's
of
kind of
women
like
love him.
yeah, yeah. That's one way to look at it.
Blake, I interviewed him because he kept winning awards when I was with FX Street. I had to interview all the award winners, and
That's
I
so
think I
funny.
did. Yeah.
I remember when we had Nicola Duke on the Forex Analytics team before the crypto craze. She would get so excited when Gregor would come
Oh
on.
yeah. Yeah. Yeah.
Anyway, so
And
let's
Jamie Sadley too. She
yeah,
came through.
that dude too. Yes.
Yeah.
Let's talk about the market and let's get all of our analysis done. And
Okay,
as you
buddy.
as you pointed out, Dale, we're up at our range highs in the euro dollar, and it's really
Yeah.
tempting. I mean, it's tempting to short the euro at these levels just because you've failed up here, so many times. But at the same time, why can't it break out and why can't it challenge highs? I mean, the market is still in the same boat right now. Is stocks are going higher, dollar is going to be weaker, and that's just it. Stocks go higher, dollars weaker. Period. End of story. I mean, there's that is the trade right now. And until stocks start to do something different, you might get some divergences in the dollar here and there. But yeah, anyway, that's just what we're seeing. So for right now, let's talk about like where the euro's at. The euro currently is at 119. Can we go higher? Yes, we can. If we go higher, where are we going? And I'm going to say this, and Nidish in our chat room, who's probably listening in right now, uh, has said, Blake, I said something today. I said, I hope we get a blow off top today. And he's like, Blake, ever since I've known you, I've heard you say that. And what I was trying to explain to him in the chat room is there is a difference between expecting it and hoping it. I never expect a blow off top. I hope to get a blow off top, because a blow off top or some sort of capitulation type of move, and it doesn't have to be. In this case, it would be higher. But it doesn't have to be higher. It could be a capitulation when everybody hits the bid at once and everybody sells. Those just don't happen often. And I've often said on these webinars that I've probably seen them less than a handful of times in my career. I could, think crude oil. I've seen this equity markets. I saw the Canadian once down at like 88 cents, the loonie. I'm trying to think of all the ones that I've seen over the years. There's just not that many. But when they happen, it's great, because then it automatically triggers a top or a bottom, in my view. And then we get two-way action after that. And I hate it when I'm in a grinding situation in the market. And so when the S&P was up here, back at the end of the year last year, I was hoping the same thing. We'd get some sort of blow off top, some, rally that would just take out all the highs, and we'd get the significant rally higher. I'm still hopeful that that'll happen. Am I expecting it? No, unfortunately. Because they just don't happen all that often. If a capitulation move happened, like, if I saw them happen like, several times a year, then I would be expecting them a lot more. But considering I've only seen probably 4 or 5 in my 22 some odd years, 23 some odd years of trading, or however many years it's been, 96, 24 years of trading, then when I've only seen it a few times, that means that the chances of it happening are slim to none. You know what I mean? So it's always about hope. So in this case, the reason why I hope that is, look, we're up against all-time highs in the S&P. If we trade above 3,400, is there enough buying out there that will trigger a big percentage move? That's the hope. The hope is everybody's got to be invested. Everybody chases the market. You have commodities that are going higher. I mean, crude was yesterday. It's kind of lackluster today, but you got gold going higher, silver going higher, dollar going lower. Bonds, for the most part, yields are down, and bonds are higher, but you've got a situation where everything's going up minus the dollar, right? So if everybody has to chase the market higher, that's great. What I would love to see is a big intraday move up 4 or 5%. And, I'm going to, no, that's not what I wanted to do. Like this. And, this is the top, just so you guys know, this is like the top of a big megaphone pattern that we'd been in forever, right? So what I was hoping for is we get some move like this, and you get us rallying up to, I mean, imagine that, up to 3,600 in the S&P, just a quick move up and then a quick move back down again. And, something like that would, really scare the crap out of everybody who's long. And, and here, by the way, look at the euro just hitting new highs. So I'm hopeful that that's going to happen. Now, here goes the euro. Euro just tripped all the stops. Here we go. I was just going to write 117, 119.40. Looks like we're going there right now. Let's see, euro dollar 19. 119.74. Euro's just tripping all sorts of stops now. So just keep that in mind. I'm going to close some Euro Canadian up here just because I had some. Just taking a little bit of that off, just FYI. Okay. So Euro just tripped all the stops. Yes, they did. And it looks like we might go a little higher than that. Let's see here. So the 127% extension of this move comes in at 119.74. So will we make it up there? We might. It's the next level resistance, and it's bullish. Now dips to 119 should be supported. So just and then below that, let's figure out what's below that. So below that would be 118. Let's put on an hourly chart. Below that would be 118. Oh, it's at 119. So this would be right here, 118.80. Okay. 118.80. Okay. It's bullish. Cable 132. Let's imagine we go past it because why not, right? I mean, stocks are breaking out, or the dollar's breaking down. So why won't the cable break, right? So 132. Beyond that, we go to 132.50, which is 161% extension of which move? That move, right? So 132.50. 132.50, 132.0. Let's just 132.50. Bullish. And let's see, where is support? Support will be 131.50. Okay. Aussie just broke out too. We're obviously still bullish in the Aussie. Let's see, Aussie. We just broke that. So the 161% extension of that is this previous triangle here. That comes in just above these highs. So that comes in at 72.55. I know we're right there, but the reason why I'm saying that is you got to be really careful with this. But let's look beyond that. 127% extension is what is that? 72.80. 92.78, but I'll just write 72.80, 72.80. And support right now will be 72 cents. Trying to get this done before Grega gets here. Kiwi. So, you know, I'm still going to tell you guys the Kiwi is range bound. I mean, I know that it's up right now because the dollar is weaker, but, you know, in all actuality, we're kind of struggling here. So 66 cents is going to be resistance and 65 cents is support. Whoops. We're going to keep it on range. Dollar Canadian. Dollar Canadian, it's slipping, but I want to show you where we're at just so you're aware of this. Let's go over to the weekly chart. So you see this trend line? That comes in right where we're currently at, okay? This trend line that comes in through the lows here, we are slightly below, all right? So it all comes in right at this 31.60, right where we're at. You know, we have this like minor channel support that comes in 161% extension comes in at 131.33. I'm actually going to write that down as support 131.30. Okay, just the reason why I'm going to do that is because I mean, there's a lot of support down here. Okay. Now, intraday, we're going to find resistance at, well, first of all, Canada lost a finance minister, Morneau, I believe, yesterday. And obviously the Canadian is stronger this morning, but that's because the dollar is weaker. If the dollar actually firmed up a little bit, like maybe this ends up being a false breakout in the euro dollar, maybe the dollar Canadian will actually rally. So we'll see. But I think resistance intraday is going to be 32 cents or 132. Sorry, let's say 132. And I mean, we're right at support. This is borderline bearish. We're right on support here. We get below 131 and it's going to go straight up bearish. Dollar Swiss. So the dollar Swiss just fell through support. So next level support for the Swissy is going to be 90.10. It's 127% extension, right? Let me get rid of this one. 90.10. Is bearish. And resistance being now, resistance is 90.50, right?
Just an observation, Blake, with this dollar weakness, S&P is not making much hay out of it.
Not yet. That doesn't mean it won't. You know what I mean?
Yeah. I'm just saying right. I could only talk about right now.
Yeah. Yes.
Yeah, that's all.
That's correct.
Reaction.
That's correct. That's correct.
Yeah.
All right. Sorry, I'm just going to continue on here. US dollar, Norwegian krone. We are now below the 161% extension that I was kind of monitoring. This is the and actually, I was just reading JP Morgan's one of their technical pieces from Monday that I missed. They're also noting this 881 level. We're below it. So we're at 870. I mean, next level support is 875, which will be that low right there. And while we're below 895, it's bearish. So 895, 875. Okay. And there we go. So and guys, if you're not watching right now, the S&Ps are hitting, or not the S&P, the Nasdaq's hitting new highs. So dollar is definitely on weak footing here. Let's go to the dollar yen. So the dollar yen, we are back at the 105. What are the spike lows here? 105.30 is its support, and then below that, and this is a failed break of this channel, which is, it's weighing on all the yen pairs. I mean, you look at, the yen pairs, they are trading a little heavy. So wow, the euro just continues to move higher here. I'm just watching the euro.
We have some data as well in about 30 seconds.
Oh, thanks, Del. So let's.
Good morning.
Good morning, by the way.
Good morning to everybody.
Yeah. Oh, what is the data? And it's not very important data.
Well, building permits and housing starts. Yes, there is not massive, but worth seeing. Let's see.
What is up with my
Odd. Anyway, both came in better than expected.
Is yours up? Oh, there it is. Sorry, mine
No
was slow
worries.
to load. That was weird.
Yeah.
Okay,
Okay.
so both came in better than expected.
Yes, but
Okay.
really markets don't care. So
No, I mean, the market's not looking at data, and I don't know what's up with my data flash right now. That's weird. Good morning, by the way.
hello.
Hello. All right, so let me get through the analysis because I know Greg is coming up. I want to make sure I give him enough time. So dollar yen, next support would be 105.30. And actually any rally now back to 106 is going to find sellers because this is, as you can see here, that was the breakdown point. And the 618 comes in at 105.27. So now, any bounces back to 106 should find sellers if we get a bounce back. Okay. And it's still in a range. Dollar index is bearish. So now that we are below, where's the dollar index? Now that we're below 92.50, next stop is, now this 127% extension. Let me get rid of this. We don't need this. Let me take this and put it so I can see the extensions. 92.11. 92.11. And now any rally back to 92.50 and then 92.75 should find sellers. 92.50, 92.75. All right. One of the outperformers here is the dollar Mexican peso, which actually performed pretty well yesterday. But resistance right now is, I think we wrote this down yesterday too, and I'm going to write it down again today. 22.25 and support 21.85. Okay. And this is range bound. 21.85, 22.25. We're range bound. Gold is bullish, but here's the problem with gold, in my opinion. Gold is up against some pretty good resistance. I know we went through 2000, but you see this 2015, this is previous support right here. We have 2015 and then 2030, and then really if we're building a triangle, it'll take us all the way to 2050. So let me write down 2015 and then 2055 and that should be pretty good resistance just because I think it's a triangle that's building. Support intraday would be that spike high. So that comes in at 1965.
That's the year you were born, isn't it?
No, that was the year you were born. I was born. Again, we are approaching 3,400, which is resistance. Now look at this. This is a bullish wedge pattern. That means this is support, 33.75. While we're above 33.75, no reason to be bearish. All right. 3,400. And, in case we break that 3,400, 161% extension of this move comes in at 34.21, which, it's possible we get up there. 34.21. All right. This is your bias chart, guys. And I don't even know if Greg is here yet. Is Greg here? Well, while we're waiting for Dale, let me ask you this. I
don't see him.
How are you doing today?
How are you doing? I'm doing well, thank you. I'm very well.
Well, it's the same old story, right? I mean, weaker dollar,
yes,
stronger stocks. I mean,
yes,
it's the same story every single day. I mean, it's all one trade, so
Yeah, it's just more of the same, and there's been absolutely nothing overnight apart from some not not things that will not move the market. Let's say so. We have Donald Trump, continuing his campaign. He's doing stuff against China. He said he's going to do further restrictions on Huawei, and he's on the election path. As is Biden, and we're in full force now because we're only 3 months away. But
Yeah.
really nothing that's going to move the market either way in terms of news or data. So we just continue. And I think the main driver is still the dollar. The dollar is going down and stocks are going up and metals going with it. I've said it before. I think metals will have another correction lower. I think a lot of markets will have a correction lower, but I'm going to be looking to be a buyer of those. And same with stocks. I want to buy stocks, but I want to buy them a lot lower than here.
So we were having this conversation yesterday in the chat rooms about the dollar and about the euro, and how the market's extremely long, like record long dollar shorts, or multi-year dollar shorts, or that means euro longs. And I was talking to my colleagues in the Northeast that I trade with as well, and they were like, well, if you take the contracts, and factor in open interest, the market's pretty long the euro, but the market's been longer the euro in the past, back when we were in the 150 level or whatever. So that's something just to take into consideration, is that the market may be long the euro, but we're the market's been longer. And so
Yeah.
that doesn't necessarily mean that the euro can't correct. But what I was trying to prevent people from doing is getting too short the euro yesterday, based on just reading all these headlines like, oh, there's record shorts or multi-year record shorts in the dollar, so things got to turn. And as I explained, and I'll explain to you guys the same thing that I explained to everybody yesterday. Look, I think if you're going to fade, okay, Greg is here. If you're going to fade the dollar, you have to look at other places other than the euro. I have explained to you and explained to everybody listening in that I believe there is a really big tectonic shift in the euro and how the market's viewing the euro, and how ever since the EU put together, as crappy as it is, the COVID relief fund that they did, is underwhelming as it is, they still came to some sort of agreement. And I believe that is going to fortify the euro as an alternative to the dollar in years ahead. So for me, I like to buy the euro on dips. And if I'm going to play the dollar on the long side, it's going to be against other currencies, whether it's the peso,
the
or
CAD and
CAD, or the
Aussie,
or the Aussie, or something like that. I'll stay away, and maybe even the cable, depending on what's happening with Brexit and trade negotiations and whatnot. So, but the euro is one that I will stay away from. Being on the short side. So I'd rather be long on pullbacks. But obviously, here we are ripping the new highs. It's hard to hard to see that coming to fruition right now. So anyway, just some food for thought. And it sounds like Grega is here. Is he here?
Yes, I'm here.
Hey, Grega, how you doing this morning?
Hey, I'm fine. How are you?
Good. Before you take over, and I want to let me talk you up just a little bit. If you guys, first of all, if you don't understand like Elliott wave formations, like me, I'm an Elliott wave novice, and I always love to listen to people like Grega, who I think is the best in the business. Getting his counts on, especially regarding the euro and the dollar and where we're going, and it's always fascinating to listen to, and I appreciate it because I'm not an Elliottician. So, Grega, we're fortunate enough, if you're a Forex Analytics subscriber and you use the premium version of Forex Analytics, you get the EW analysis for all these different currencies. Now, having Greg on here, he comes on maybe once every week or two. Well, it's usually once every couple weeks. We have him come visit us here at the FACE webinar. So you guys are in a really, you guys are in for a treat today to get his analysis. So, and now remember, if you want to learn how to get Forex analytics for free and you're not in the United States or Canada, you could use the Forex Analytics sponsored link right here. And if you open an account with Pepperstone, which is one of the largest FX brokers in the world, you could get Forex Analytics for free for a period of time. So, you know, check it out. And then obviously, if you're in the US or Canada, make sure you, you know, look up Forest Park FX, because you should be getting cashback rebates on your trades anyway. So that's where they're going to help you out. So Grega, good to hear from you. It's nice to see that you're back from your holidays. How were your holidays, by the way?
Yeah, I mean, it was very good, but short. You know, it was just a week because of Corona situation, and it's not like the past years. So, but
Yeah.
we are looking for something again, for something maybe a short one here around.
Well, you know, I'll tell you, I'm very jealous of you and other people that have taken vacations, because we're pretty much, even though we're not in a like quote unquote lockdown state, you know, it makes sense to just kind of stay put if you can. You know, for us, especially being in a COVID hotspot. So I'm very envious of those of you that are taking holidays and at least being able to enjoy the outside. And I saw some of the pictures that you shared. It looks beautiful where you've been. So I'm going to pass it over to you, because I don't want to take any more of your time. And Dale, Stelios, thank you guys for always being here. And I'm going to pass it over to Grega. So I'm going to stop sharing so Grega can take the charts. And Grega, I know everybody is really excited to hear your analysis. So thank you.
Sure. Thank you, Blake.
Hi, Grega.
Hey, how are you?
Good luck today, Blake. I'm doing pretty good.
Nice to hear. So you had one Elliott Wave guy yesterday.
Yeah, Wyckoff too. Do you know Wyckoff, Grega? Is it similar?
No, not really.
Okay, so he does both, but yeah.
Okay, so you can see charts?
Yes, dollar, yeah.
Yeah, I mean, we will start with the dollar since Blake
Okay.
covered it. I mean, euro dollar is definitely in a very strong uptrend. So dollar is doing the same. I have been, if you recall, a few weeks back, few months, I was looking for potential only 3-wave drop, but this now looks like a very extended move that has actually impulsive characteristics. I mean, you could still label this as an extended wave C down from 100 level, but it's a little bit tricky situation. So I would rather go with the bearish wave count, meaning expecting more downside after any bounce. So, I mean, I agree with Blake. After any pullback on euro dollar, I think that there can be opportunity on the upside, and looks like dollar index could do the same. However, looking at the 4-hour chart, we are just breaking out of this consolidation. So I'm not sure if this opportunity is now on the short side is anywhere near. I think that we are maybe in this 5th wave within this potential wave 5 or 3. So watch out for potential supports, but this may not be maybe. There's still a room, I mean, towards 91.50 or 91 level. If I just do some FIB analysis here. So since this was a running triangle, I take the distance of the widest lag within this triangle, which was obviously this wave B. So then I take this distance and measured it from the breakout point. Okay, and the breakout point was right here yesterday. So it looks like there is room for 91.50. Now, also, I will take this wave A to B, also the same lag, and we'll use 161.8% extension. And also you can see that I came out with a very similar region here. So it looks like that there is room for more downside here, but then I would just be very careful down here, because after all, we know that when we move out of a triangle, this is normally an indication that we are in a final leg of a higher degree impulse, because triangles can occur in a wave 4, meaning if you are in wave 5, you are in late stages of the impulse. So be aware of potential limited downside, but as I said, still, I mean, trend is clearly to the downside. I just think whenever the opportunities, whenever pullback occur, that will be opportunity on the short side. So since dollar is bearish in general, I mean, I was looking for several dollar pairs for potential opportunities, and the one thing that I really love is probably dollar Mexican peso. This one is very interesting from a few things. I mean, there's definitely a clear bearish reversal happening down from April highs. You have lower swing highs here, and now you have a consolidation. And what I really love about this consolidation is that you had in the first part of this recovery away from June lows, this was a free wave move. So if this was a free wave move, it means that maybe this was already a completed wave 4 up there, or it's part of a complex triangle, okay? So in both cases, it means it's a temporary pause, and that sooner or later, we are going to see 2144 taken out. Another thing that I really love is that there is still March gap is still open. Let me just try to show you this on the next chart. Okay, there is a March gap when stocks fell dramatically. So obviously that's when dollar was a safe haven, and a lot of FX pairs also have seen those gaps. Some of them already covered those gaps, but dollar Mexican peso is still far away from it. So trying to merge the wave structure and this open gap, it really makes me feel that we could see a breakdown. I'm not sure if this will be just in a straight line, but I think that this appears like a very nice, healthy consolidation, and that this breakout could really be an opportunity on the short side. Now, looking also at the substructure of this triangle, this is an ABCDE pattern. It looks like that we have waves A, B, C, D, and now we are waiting for a wave E rally. Now, sometimes wave E can be slow, meaning it may not retrace all the way back to the upper trend line. That would be obviously a textbook stuff, but markets are not always textbook. So watch out maybe for first resistance here at this wave A swing low at 22.30, and then you have another one at 22.60 level. So that would be a zone from where I would be expecting a reversal happening to the downside, and ideally into much lower prices for a wave 5. Also looking at dollar Mexican peso here at the candlesticks formation. What I love about this one on a weekly chart, actually. Here was firstly a doji here, and this was what, 4 weeks back, when actually you would expect that the price would rise much higher, right? Well, in the following week, you have again got a doji, this time the bearish one. In fact, this doji tells me that bull market is not strong, and that bears are actually much, much stronger, especially if we consider that the next week we also have this red candle. So the whole formation together really suggests that bulls are always finding resistance whenever they try to go a little bit higher, but bears are coming down much stronger. And I think that this candlesticks formation overall also goes perfectly with this triangle idea. If you have any questions, or Dale, if you will keep an eye on the
Yeah, I'm
questions.
listening. Great presentation so far, and I'm
Yeah.
I'm looking at questions. You know, people are interested in the euro, but I mean the Dixie is pretty much
Yeah, I mean, I can take a
similar.
look at euro, no problem.
Okay.
So euro dollar is just breaking higher, and it looks like that we have, as you said yourself, same situation like we have on dollar index. We are moving out from this fourth wave, so it could be final leg into wave 5, okay, or of C, or maybe we are in wave 5 or 3, meaning much more upside will come. And I really start loving this second wave count where we have impulsive trend here in progress. And the reason why I love this count is because the trend is up and the count is bullish. Okay, so always when you have these two going into the same direction, obviously, then you know where opportunities could occur in which direction. I mean, this count is also still very valid, suggesting that maybe we'll see a top, but I would not be looking for any short opportunities unless we see a very strong drop in a very short period of time back below 1.13. Okay, that would be a totally different story. But sometimes it's very good to keep an eye even on those very extreme alternate counts, just to be prepared if something unexpected happens. But I think that when it comes from trading to trading, I really think that this one is the one that you should look for.
Getting a question on 10-year notes.
Yeah, okay, I will cover the 10-year notes a little bit later. Firstly,
Okay.
I will then look at the dollar yen. So dollar yen is turning very aggressively to the downside for the last few days. And it looks like that this recent recovery was made by three waves, a corrective wave B that can be part of this very complex corrective decline. So trend is still down despite not so clear or good wave structure, but there is still room for 103.70, where wave C would be equal to wave A. And the reason, obviously, why I'm looking at is to these prices to a new low is because here on the 4-hour, you can very clearly, nicely see very sharp wave A, wave B, and very nice sub-5 subways within this wave C before this breakdown happened. So it looks like this breakout actually here of this corrective channel now is confirming that bears are still here and that most likely we are going towards 104. Now, US yields also, I see them in a triangle, and I think that even those US yields will come a little bit lower, and if that's going to be the case, then dollar yen, as you know, could be even in a much sharper drop than we think. So in the short term, I think that even here could be opportunities. Because, I mean, euro dollar is at a new highs. So I'm not sure if I want to look for opportunities at a new high. But here on dollar yen, I still see room to the downside. So I think that this next pullback could be very interesting if we get one back towards 106. I think that this could be maybe opportunity to the short side as long as we are trading below 107, because that's clearly identified invalidation level up there.
Okay, I have a question for you regarding the yen. You made a real nice pip on the long side of US dollar yen. I don't know where you got out, but you had a very nice lead. What was it, as an Elliotician, that changed your mind? Was it the break of the channel?
Yeah, of course. It was,
Okay.
I mean, because I was looking firstly for at least 3 waves of recovery, because that's the minimum structure that is required in corrective formations.
Right.
Okay, so you cannot say that this was only wave B and you will label it completed like here, because it was an impulse, meaning it should be part of a higher degree structure. So back then I was looking for this wave C or maybe even wave 3. I was open-minded. I didn't say that we are in a wave 3 or wave C, but when market came back towards 106, then clearly we made much deeper pullback compared to the previous correction, right? So in such case, when you have this lag like this one, much bigger compared to the previous subwave, it tells you that trend is changing and that bears are much stronger than bulls. So definitely this broken corrective channel and this impulsive price drop in particular is suggesting or confirming why we should listen the price and look for even more weakness. I mean, if we also consider where we are here on a daily chart, that we are in a downtrend since March, why we would fight that if we have only 3 wave rise?
Got it.
Yeah.
Thank you, buddy.
Pleasure. Okay. Let me also take a look at ASI. Now, ASI is also turning to the upside, and looks like we have a very nice break out of a triangle here Now, the first projection for this wave 5, or ideal projection, I would say, would be at 0.7320 up to the 7360 area. At the same time, what I noticed is that copper here broke above this trend line of this flag pattern. So it looks like this wave 4 is finished and that we are headed much higher for a wave 5, and this could be very positive for Aussie dollar as well. So I think that Aussie dollar is going to see more upside, but still, when copper is going to hit a new high here, maybe around 1305, just be aware of potential resistance, because it will be in a fifth wave, and at the same time, even Aussie dollar will obviously be looking for potential limited upside here in a wave 5 as well. So for now, those markets are still in bullish sequence here, but could be stepping into some final stages of this recovery when we move with copper to new highs. Also, let's take a look on dollar CAD. Now, dollar CAD is coming to the downside very nicely, but looking at this weekly chart here, I would not be turning aggressively bearish, and there is a reason. Because of those three wave drop that first occurred here back from 2016 highs to 2017 lows. So again, either that was could be labeled as a completed correction and you're going to see a new high, or it's part of a complex correction. I think it's part of a complex correction because we haven't seen a new high. We just came very close to the previous one. So maybe we are now here trapped in a very big consolidation in a triangle pattern. In a triangle, subwaves can move to the 61.8% of the same leg that moved into the same direction, meaning of this wave A, you take the 61.8% and put it on the top of a wave B, and that's your projection for a wave C. And
where's that come in, Greg? Around 128?
That comes in
C.
around
C.
Around 1.3070.
Where C might come in, the low for this move. Yeah.
Yes, exactly.
128.
No, I mean a little bit higher here, around.
Okay.
I would say around 1.3. Okay, it's also psychological level, and at the same time you have this swing low here back from December 2019. So maybe we shake some positions down here, and then we see maybe a reversal higher. Also,
so let me ask you this: how do you square a bullish count in USD CAD and a bullish count in Aussie USD when they're both commodity currencies? Could it be because of energy?
Yeah, very good question. Let me just remind you that there is maybe just a very big consolidation going on the Aussie dollar. Maybe we'll see on Aussie dollar on a big picture only 3 wave of recovery, and you are now at the final stages of a wave A, then you will get wave B, and then more upside for a wave C, which would do, and that would make a zigzag. At the same time, dollar CAD could actually stay sideways, and maybe it will form a triangle. So both markets can be forming a corrective price action, but they're still different markets, meaning that they may not form the same patterns.
Got it. Okay. You have to treat them all individually. We get in trouble trying to put the jigsaw, all the correlations together sometimes.
Yeah, of course, definitely. Yeah. I mean, we are definitely, since March, we are in a very important phase of potential reversals here when talking in US dollar in general, and some of the markets will show us the change in direction earlier than others, but still this is a long process, and I think that we have to wait a little bit longer before those markets all will come back together, and maybe some of them show the perfect same picture.
Do you want to wrap it with WTI?
Yeah, sure.
Okay.
So, dollar CAD, I mean, I will try to merge it for the midterm view. Okay, so what I'm seeing here on dollar CAD it could move into potential supports here. At the same time, we see Aussie dollar moving in potential resistance, but still room to hit this resistance. So what is going on the crude oil? Well, at the same time, could also be moving into resistance. What I see here is waves 1, you have wave 2 pullback, you have a wave 3, wave 4, and now looks like that we can be forming an ending diagonal here for wave 5, okay? I mean, what is the most important here is that I do not see any strong progress to the upside despite printing a new high here. So to me, this tells me that market is not that strong anymore and that we could really be headed into important resistance for this wave 2 or wave B pullback. But I think that there will be opportunities on the upside, maybe a very nice one, after we see this setback. So it's just game of patience here. I mean, market moved some of them very, very nicely and make some big moves here. So I think that these corrections would definitely be very healthy. Looking at the shorter term picture for crude oil, that's an ending diagonal that I covered it, and it looks like that new high could be coming in maybe around 44, and then we face resistance. So we'll see what happens up there. For now, at least intraday charts are still pointing to a new high, and then just be a little bit careful out there.
Okay. What a great presentation. What do you want to keep going? Let me just put it, is my guest there here? Ed, are you here? Lord Polimus, are you here? If you do, write in the chat. Okay, go ahead, Grega.
Yeah. Okay. I can also take a look at gold.
Okay.
I'm sure that everyone are interested to see if this are wondering if gold is just made a temporary pullback or it's going higher or stopping, whatever. I think that we still can be trapped in this consolidation here around $2,000. It's a very important psychological level. Everyone are trying to, again, step into this market to catch the uptrend, but this may not be so easy as it seems. And corrections will always try to confuse a lot of traders on both sides, actually, so that there will be a much more massive breakout. And what I'm referring to here is that this wave 4 that I'm tracking could it be maybe as a flat correction, irregular correction, maybe even some kind of a other type of a correction. But I really doubt that this sharp drop was already all corrective movement and we are going much, much higher. I think that something more complex will occur here. Even if we retest the highs, I would still be very, very careful and just be aware that this third leg of a pullback could still show up here. So I think that there will be opportunities on both gold and silver, but I think that much better supports is a little bit lower. I'm not sure that I would be looking for any, at least for the short-term setups, I would not be looking to buy at these prices. If we go higher, okay, let it go. But if it comes lower, I think that there can be much better opportunity.
Thank you, buddy.
Thank you.
Great presentation. Everyone thank Grega for sharing his work today. Okay, and you know, you can have access to this great mind, great technician, becoming a member. Okay, so I encourage you to subscribe along with the other experts. Like Andre has a pretty big fan club going, and we all know what Blake and the rest of the team could do. So everyone, thank you very much for hanging out with us today. It was great having the Wizard of Waves with us. He always gives me clarity, so I'm sure he helps you out too. You want to say thank you? Become part of our community. And that's a wrap. Remember, don't just count your pips, count your blessings. And let's see how my turnaround Tuesday pick works out in the spoos. And I'll see everyone tomorrow. You're very welcome, DJ. See you, Bibik, Jagdish, Brock. Good luck today. We'll see everyone tomorrow. I have Rakesh with us. She'll be bringing her Boomy with her. So we'll see what she has to say. Good luck today. I'll see you guys tomorrow. Adios. See you, Alexandra.